Welcome back to the channel. I'm Algabot, and this is where we take apart automated trading strategies for MetaTrader 5 and study exactly how they think. Today we're looking at one called Bar Value Trend Shift. It's built on a classic tool called the Rex Oscillator, which measures buying and selling pressure using the full shape of every candle, not just the body. By the end of this video, you'll understand how the strategy reads pressure, how it decides when a genuine regime shift has happened, and how it manages its stops and targets. This is educational content only, so let's dig in. Let's start with the big picture. Bar Value Trend Shift is a trend shift strategy that runs on a single time frame, whichever chart you attach it to. It's designed to work on any instrument that produces clean candles, so you'll often see this idea studied on major foreign exchange pairs, but the logic itself is symbol agnostic. At its heart sits an indicator known as the Rex Oscillator, first described by Jack Hudson. What makes it interesting is the raw ingredient it measures, called the true value of a bar. Instead of looking only at where a candle opened and closed, it uses all four prices: the open, the high, the low, and the close. The formula takes 3 times the close and subtracts the high, the low, and the open. A strong bar that closes right near the top of its range, above its open, with only a small upper wick, produces a strongly positive reading. A weak bar that closes near its low produces a strongly negative reading. A balanced, indecisive candle sits close to zero. Because it folds in the wicks, it rewards conviction and penalizes rejection tails. Those raw pressure readings are then smoothed twice. First, a moving average of the true value creates the Rex line, which is the main pressure line. Then a second, shorter moving average of the Rex line creates the signal line, which acts as its own baseline. When the Rex line crosses its signal line, that's a potential shift in who's in control. But not every crossover matters. A cross that happens right at the zero line is often just noise. So the strategy adds a filter based on the average true range, requiring the Rex line to be genuinely one-sided before it acts. This approach is aimed at traders who like momentum and regime change ideas and who want to see the exact mechanics spelled out. It is not a promise of any outcome. Trading always involves risk, and losses are part of the process. Now let's walk through the exact logic, step by step. The strategy only acts once per completed bar, so it waits for a candle to fully close before doing anything. When a new bar forms, it looks at the bar that just finished. First, it calculates the true value of that bar. It takes 3 times the closing price and subtracts the high, the low, and the open. That single number captures whether buyers or sellers finished the bar in command. It stores this reading in a rolling history. Second, it smooths that history. The Rex line is a simple moving average of the true value readings, using the RexPeriod, which defaults to 8. Then the signal line is a simple moving average of the Rex line itself, using the SignalPeriod, which defaults to 5. So you have a faster pressure line and a slower baseline drawn from it. Third, it measures volatility with the average true range over the ATR period, which defaults to 14. It multiplies that ATR by the PressureAtrFraction, defaulting to 1/10, to build a deadband around 0. This threshold is the key filter. Now the decision. The strategy detects a crossover by comparing the current and previous values of both lines. For a long, the Rex line must cross above the signal line, and at the same time the Rex line must sit above the positive threshold. That combination means a fresh upward shift, with buyers genuinely in control rather than the lines simply brushing near zero. For a short, the mirror applies. The Rex line must cross below the signal line, and the Rex line must be below the negative threshold, signaling that sellers have taken over. For risk management, both sides are symmetric. When it enters, the stop loss is placed a number of ATRs from the entry, set by ATRSL multiple, which defaults to 2. The take profit is placed further away, set by ATRTP multiple, which defaults to 3. That gives a reward-to-risk ratio of 3 to 2 on the default settings. Finally, there's a stop and reverse rule. If the strategy is already long and a fresh short signal fires, it closes the long and opens a short, and the reverse for a long. Position size is fixed by the lot's input, defaulting to 1/10 of a lot. Let's read the actual MetaTrader code on screen. At the top are the inputs you can adjust. RexPeriod and SignalPeriod control the 2 smoothings, 8 and 5 by default. PressureAtrFraction sets the size of the deadband around 0 at 1/10 of the ATR. ATR period, ATRSL multiple, and ATR-TP multiple handle the volatility window and the stop and target distances. Lots fixes the trade size, and magic tags the strategy's own positions. Next comes the heart of the logic. The variable named THR is the threshold, the pressure fraction times the current ATR. The strategy then checks two crossovers. Cross-up is true when the Rex line was at or below the signal line on the previous bar and is now above it. Cross-down is the mirror. The long signal requires that upward cross and that the Rex value is above the positive threshold. The short signal requires the downward cross and a Rex value below the negative threshold. Now look at the two trade blocks. For a buy, the strategy reads the ask price, places the stop loss below entry by the stop distance, sets the take profit above by the target distance, and calls trade.buy. For a sell, it reads the bid price, places the stop above and the target below, and calls trade.sell. Both sides are symmetric, same volatility scaled distances, just flipped in direction. That's the entire engine in a handful of lines. Let's walk through this illustration candle by candle. In the lower panel, you can see the Rex Oscillator. The gold line is the Rex line, our fast pressure reading, and the blue line is its signal baseline. The gray zone in the middle is the neutral deadband, the region around the zero line where crossovers are treated as noise and ignored. Look at the first two candles. Price is drifting lower, and the Rex line is sitting below both zero and its signal line. Pressure is clearly on the sell side, but notice the strategy does nothing here. There's no fresh crossover yet, so it simply waits. On the third candle, something changes. A strong bullish candle prints, closing near the top of its range with only a small upper wick. That's exactly the kind of bar the true value formula rewards, and it pushes the gold Rex line sharply upward. In this moment, the Rex line crosses above the blue signal line, and crucially, it clears the upper pressure band, climbing out of the neutral deadband. Both conditions are now met, a fresh upward cross and genuinely one-sided pressure. That's where you see the buy entry marker appear. The strategy goes long and immediately places a stop just below, sized at 2 ATRs, with a take profit further above at 3 ATRs. Now follow the next few candles. Price pushes higher, bar after bar, each one closing strong. The Rex line stays elevated, well above the signal line and above the pressure band, confirming buyers remain in control. By the seventh candle, price has traveled the full distance to the take profit target, and the long trade is closed at its take profit marker. On the default settings, that's a reward of 3 ATRs against a risk of 2, a reward to risk ratio of 3:2. Then the character of the market flips. On the eighth candle, a bearish reversal candle forms, closing back down near its low after failing to hold the highs. That rejection drags the gold Rex line down hard. It crosses below the blue signal line and pushes beneath the lower pressure band, out the bottom of the deadband. Again, both conditions align, a fresh downward cross and one-sided selling pressure, and the sell entry marker appears. The strategy opens a short, placing its stop just above and its take profit below, both scaled to the ATR. From there, watch the last few candles roll over. Each one closes lower, the Rex line stays pinned below its signal line, and price grinds down toward the target. By the final candle, price reaches the take profit level for the short, and that trade is closed at its take profit marker. Notice the symmetry of the whole sequence. The long and the short use the exact same machinery, just mirrored. Pressure builds. The Rex line crosses its signal beyond the deadband. The strategy commits, and the ATR defines both the risk and the reward. And remember, this is a clean textbook illustration. Real markets produce false crossovers and losing trades too, which is why the deadband filter and the fixed stop exist in the first place. So that's bar value trend shift. We saw how the true value of a bar reads pressure from all four prices of every candle, how the Rex line and its signal line turn that into a fast and slow pressure engine, and how a crossover beyond an ATR-scaled deadband signals a genuine regime shift. We also walked through the ATR-based stops and targets and the stop and reverse rule that flips the position when pressure changes sides. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader strategy analyses, and leave a comment telling me which strategy you'd like me to cover next. You can find more educational material over at www.algobot.live. Remember, everything here is for educational purposes only and is not financial advice. Past performance does not guarantee future results. Trade responsibly.